When Jack Kramer and Nick Martell launched their daily newsletter, Market Snacks, in 2011, they kept their names off the publication so that it wouldn't jeopardize their finance day jobs. But once the newsletter started to attract readers and sponsorship revenue, they decided to come clean. Luckily, their bosses let them continue on with their side hustle. Flash forward about a half decade, and Market Snacks had gained enough traction that they both decided to go to business school so they could learn to scale the company. Around that same time, they teamed up with a large podcast network to launch a daily companion show, and almost immediately it was featured on the Apple Podcast app. This success didn't go unnoticed. Robinhood, which at the time was a fast-growing stock trading app, came on at first as a sponsor, but a few months later decided to outright buy Market Snacks to leverage it as a marketing channel for the app. Jack and Nick continued to host the podcast while managing the rest of the Market Snacks team, and then in 2022, they went to the Robinhood executive team with the radical proposition. They wanted to spin off the daily podcast and acquire it from Robinhood. Amazingly, their bosses went for it, and that year they renamed the podcast to The Best One Yet. In my interview with Jack and Nick, we discussed how they came up with the idea for the newsletter, why Robinhood allowed them to take the podcast back, and what they've done with the company ever since they became full owners. Hello, I'm Simon Owens, and this is The Business of Content, the show about how publishers create, distribute, and monetize their digital content. If you want to listen to an audio version of this show, subscribe to The Business of Content wherever you get your podcasts. And longtime listeners of this show know that it carries no advertising. The only way to support the painstaking work I do here is by becoming a paid subscriber to my newsletter. Subscribers get a half-hour introductory phone call with me. They also get to submit questions every month that I try my best to answer on this very show. Subscribe at simonowens.substack.com. That's simonowens.substack.com. Or just Google the words Simon Owens and newsletter. Okay, on to my interview with Jack and Nick. Hey, Nick and Jack, thanks for joining me.
Hey, great to be with you, Simon. Thank you.
Great to be here, Simon. Thanks for having us.
So let's first with just hearing about how both of you first met. It was in college, right?
Correct. It was a cold winter day in Vermont. Nick and I were 18 years old, and we were randomly selected by the Middlebury College admissions department to be freshman year roommates. Unbelievable, fortuitous decision by that admissions department. That really did change our lives.
That is crazy that they put us together. Crazy.
We walked into the room and recognized that we each had a season of Seinfeld DVDs. And we're like, yes, same sense of humor. Even though I'm from rural Vermont and Nick is born and raised in Manhattan, we have a common ground that we can both bond on. And I brought my PlayStation 2 to play those DVDs on our little TV.
Jack and I always say it's like with co-founders, you want this kind of like perfect Venn diagram situation where there's just the right amount of overlap. For us, it was like shared sense of humor, which is actually, we think, a powerful business strategy is humor. But also then just the right amount of difference where there's distinction and you learn and are excited or interested in the other person and kind of can bring other things to the table. So
For example, I pronounce Super Mario, Mario. Nick pronounces it.
Yeah, as one does.
Wow. And you know, that random roommate assignment, that's like a complete crapshoot. Like, I mean, I remember that I got along with my roommate semi well, but he was definitely a weirdo, and there were some that were just like did not get along at all. So you did totally luck out on that front. Were you both finance majors?
Simon, I feel like this is like a TV show where now we're going to bring your roommate out.
I was an econ and German double major, and I studied abroad in Berlin and actually took econ classes in German at the Free University of Berlin. Nick visited me while I was in Berlin.
It was a great 24 hours, 36
Nick
hours.
was a history major, but took... Actually, Nick, I don't know if we ever took an econ class together.
We took one econ class together.
Okay.
Macro, introduction.
Sorry for forgetting.
Yeah, it was with a teacher who actually made us read a novel prior to starting the class. It was a novel about a love story about economics, and that was how we kicked off the class, and that was pretty cool.
And you guys both, though, even though you know, you only one of you was an econ, had a background in econ, you both went to work in finance, right?
Correct. I worked at a German bank actually immediately after college in New York City. Nick went on to work at UBS, and we became roommates again after college, living in the East Village of New York. And it was 2011 when we both started working in the industry, and we both walked past Zuccotti Park every day to get to work, which was the home base of Occupy Wall Street. The European debt crisis was happening. The United States was about to be downgraded by the S&P for the first time because of
The shutdown.
the first.
Yeah.
No,
Or the debt crisis.
the debt ceiling
Yeah.
crisis, the first one. So there was all this insanity happening in the financial markets. Nick and I had a front row seat, and the truth be told is that we weren't totally satisfied by our finance jobs, and we craved a creative outlet where we could flex some creativity and write a little bit. So Nick and I got together in November of 2011 and kind of said, like, we got to do something. We're just not totally satisfied. There's an itch we need to scratch. So we decided to write a blog. We eventually started calling it a daily email newsletter, but we started summarizing and explaining the financial markets and business news, tailor-made for our millennial generation.
And what was the blog called?
Well, it was called Market Snacks, but it had no authors because we were doing this in secret outside of our bank job, Simon. We were literally, Jack and I had a wild routine. Basically, we got together at this bar like right near the East Village called Old Town Bar. And we said, okay, we're going to do this creative endeavor. We're going to make business news accessible. We're going to do it in the way we wish we had it, but we can't miss a day. And Jack was like, if we miss a day, we're not going to be as relevant. So we were like, all right, we won't miss a day. So Jack and I crafted this routine where at the end of the trading day, we would email each other what stories
we're going to cover.
Like curation was like our goal. How do we curate really interesting stories? And we would actually do it in white font so that like no one would realize what we were doing. We'd send it to each other, and then anonymously we would then craft this newsletter when we got home. And we crafted Market Snacks every single day, and the audience started building, and the audience started building. And our little kind of like secret project just took on a life of its own.
Our first readers were our moms.
They were great.
And our friends and our roommates and family. But we blasted everybody we knew and asked them to subscribe.
And so, like for the blog version before it became a newsletter, it would just be like almost like a morning, like what we think of like the Morning Brew or the Hustle, where it would just be a series of stories with your kind of unique voice, kind of summarizing. So, like the value of it was your choice of story, and then how you kind of distilled it for like an audience, for like a more general audience.
Voice, choice, and distribution. You know, it was about a voice that wasn't being used in business news at the time. It was about the choice of not feeling the obligation to cover the debt story every single day. Let the Wall Street Journal do that. We'll cover it once, explain it, and then move on to another curated story that's maybe more relevant, and not just deal with marginal updates to stories. And then the distribution. You know, the funny thing about newsletters is that people have been saying newsletters didn't make sense for the last 15 years. And that newsletters and email were going to be killed by Slack, and that it just wasn't an exciting technology. The reality, Jack and I thought, was that everyone has an inbox. That's valuable real estate. It doesn't seem like it's going away anytime soon. And we may as well shift from just having a website blog to getting in people's inboxes. So we transitioned to newsletter and kind of never looked back.
And like, how did people discover the newsletter back then?
Really, word of mouth. And frankly, we're glad it was word of mouth, because word of mouth is the greatest test of customer commitment. If someone is willing to share you with a friend, that means that their reputation's on the line, trust is on the line, future referrals that they would make are on the line. So the fact that our early audience was all purely word of mouth spoke volumes about their commitment, and the fact that we had a product market fit. And then the fact that someone then had to take what they just heard and then make the effort to go to our website and subscribe also showed that there was a desire for what we were putting out there in the world. So the fact that we relied so much on word of mouth at first ended up really proving the potential of the product.
I think what Nick's trying to say is there was a lot of friction to grow.
Yeah,
and when people referred us, they had to take a number of steps and a number of clicks. We all know that those steps and those clicks are different layers of friction that can kill someone from referring. But the fact that they were doing that gave Nick and me the early validation that what we were doing was valuable. Eventually, we had a big enough subscriber base that someone reached out and said they wanted to advertise on our newsletter. And that's when Nick and I said, geez, if this is going to make money, we have to come clean with our current employers, these financial institutions, inform them that we have a blog we're writing, and ask them permission for an outside business interest. And we actually both got approval. So It was all good.
And so
Then we put our names on the website.
well, prior to putting your names on it, did any of your work colleagues know about this newsletter? Like, had you sent it to them? Because like, in order to get word of mouth going, you need to get some like influential people reading it who can then recommend it. How, like, you said that your mom's read it. Did you kind of secretly send it around to some people, or like, how did they find it?
I sent it around to everyone I knew.
Yeah.
And I confided in some people at work, but I did not rely on my colleagues for distribution of the newsletter. I tried to keep some separation there.
Mm-hmm. And so you put your names on the newsletter. So what did that do for you in terms of helping you grow or monetize or anything like that? What did that do for the newsletter and for the business side as well?
Well, first of all, writing it anonymously, it was actually improving my performance, and Nick too, at our day jobs working in finance, because writing is so important for anyone, whether you're just sending emails or whether you're telling someone a story on the phone and you wanted to have some notes prior to your phone call to guide your story, or if you're doing a PowerPoint presentation. That's all writing. And Nick and I learned with our newsletter how to write concisely and to the point with elements of humor and voice, to keep people interested and, dare I say, entertained sometimes. So even if Market Snacks stopped there and we never made any money off it, Nick and I were benefiting professionally. And that was our pitch to our bosses when we told them about this newsletter. I mean, Nick and I were writing about the financial markets and business news every day. That improved our performance in front of clients and made us more aware of the markets. So it was actually an easy sell.
Mm-hmm. And Simon, you're almost getting at also a question Jack and I have talked about a lot, which is, the brand versus the personality. And there's a spectrum here and a pendulum that kind of swings back and forth between the two. And at the time, Jack and I really did focus the product on the brand. It was Market Snacks. And even if our names were on it, it was really the Market Snacks product. As we've shifted and now, 10 years later, run a podcast first company, podcasting is more personality first. So while we are all about the T-Boy, the best one yet company, and that's our current company, the best one yet, and that's the podcast. There's also kind of that more personality element because the podcasting medium lends itself more to the host and the chemistry and the personality. So it's Nick and Jack of T-Boy, whereas Market Snacks as a newsletter was more Market Snacks.
Yeah, we never put our name on the newsletter, actually. We only put it on the website for those who are interested to learn more. The email was sent by Market Snacks. Nick and I were writing it, but we didn't have a byline on that newsletter.
And if you look at the other big newsletters out there, I mean, the Skim, the Hustle, Market Snacks, like they're really brand first rather than individual writer or personality first.
What it did allow us to do, putting our names on it, is become a business and start selling ads. And then we had some revenue that we could use to invest into growth. So finally, we graduated beyond word of mouth, which is a slow way to grow, very slow, into some paid marketing opportunities.
Well, like, and those, you got that first advertiser. How much demand was there for advertisers in the immediate aftermath of that? Like, we'll talk about later on once you got a lot bigger. But like, was there like just advertisers beating down your door at that point, or was it more just kind of things kind of randomly floating into your inbox that turned into sponsors?
We never did advertising outreach, really, because Nick and I were too busy. I mean, this is a challenge for every media entrepreneur, yourself included, I'm sure, Simon, is that there's a trade-off between content focus and growth focus. And if you focus too much on the content and just focus on putting out the best damn newsletter there is, then you're limited to word of mouth growth only. Nick and I probably are guilty of that. We focused a lot on content because we also had full-time day jobs. So the advertiser outreach was directly to Nick's and my inbox, and we managed them on a one-off basis. I wouldn't say that first advertiser opened the floodgates. Nick and I actually hustled to bag our first advertisers, one of whom was kind of a cool advertiser, and we actually basically said to them, hey, we love your brand. If you were in our newsletter, we're telling you our audience loves your brand too. It would be cool for us to have you as an advertiser. It'd be great for you too to be associated with our brand, and our audience would love it. Can you just do an ad with us for free? We basically just asked them for 3 gift cards. and kind of parlayed their advertising in our newsletter into a little growth opportunity. We encouraged people to spread our newsletter, and we offered as a prize $300 gift cards to Outdoor Voices, which was the brand back then. So early on, we kind of did some free advertising opportunities to really kind of get some deal flow. And then once we had a little bit of deal flow, that did start to open the floodgates. And then we had a full schedule booked out for ad sales.
That's the advice Jack and I always give, like young media entrepreneurs or anyone starting out in the business is you don't have to make money off your first few ads. You have to think of them almost as an investment in your future ads. And like the cool thing about Outdoor Voices that Jack mentioned is it was a benefit for our brand. Like we were winning even if we weren't making money off of it because other brands and saw we did Outdoor Voices, and then that allowed Betterment to feel comfortable to say, hey, we will pay you guys for a sponsorship. So it was kind of like an investment in future advertising for us, by us, to not charge for those initial ads. Also, to be honest, Jack and I didn't even know how to charge for the ads.
Oh,
so
we
like,
had
we
no
didn't even know
idea.
what the market price would
CPM,
be.
didn't even know what that was.
Yeah,
we
didn't
just
know
had
what CPM
a fixed fee.
Right.
And was it like financial services brands that were primarily the ones that were advertising with you?
This was the era of venture-backed direct-to-consumer brands who had all the money in the world to spend on marketing.
Like Casper and stuff like that?
Yep. Casper, some wonderful brands with kind of home goods that we love. They were targeting our millennial demographic that was looking for, a brand that felt different than the old school brands that they saw at brick and mortar stores. So I would actually say that, Casper, Quip, the toothbrush company, Snow, the home goods company, Brooklinen, these are all great brands. I still have their products in my home, but they were some of our early advertisers, in addition to the financial services industry.
And then you both quit your jobs to go to business school, right?
We did. We both went to business school and learned some wonderful lessons from our marketing classes on how to improve our newsletter, which we continued to publish daily, even while at business school.
Yeah, the interesting thing about going to business school is just to set the scene for you. Jack and I had been side hustling for a few years now. So like we would go and do a TV interview at the New York Stock Exchange at like 7:30, 8:30 in the morning. Then we would take the makeup off and we would go to work and do like our day jobs. Then at night on the subway home, we'd be texting each other and crafting the newsletter. So like we were, this side hustle had grown to the point where it was like pushing some boundaries and it was fully monetized. Yeah. So we went into business school with a really interesting kind of angle. A lot of people go in because they want to start a company, so they have a startup idea. And a lot of people go in because they want to change careers. We were in this unique position where we went in with an existing business. So for business school, you're going to class 4 days a week. Jack and I were then working Fridays full-time on the company and over the weekends. And so we went into business school with a company that we could apply the lessons to immediately. For example, one of Jack's professors had this idea that instead of us sending ads or selling ads every single day, we should force advertisers to book out a 2-week period. Better for us because there's more money. Better for us also because our ad sales cycle doesn't require constant churn. And better for them because they're more likely to get better results than if they just did 1 day of ads. So that was something that we implemented like the next day. Like we literally changed our entire process the next day because we had an existing company in business school. So business school was a really cool way for us to almost accelerate the business.
And was business school, was the intent of it so that you could be better at running this specific business? Or did you think when you got out of business school, you were going to go, work for McKinsey or some other company or something, or a startup or something like that? Like, was the intention of, taking the newsletter to the next level in some way?
Nick and I actually both had two paths, Robert Frost style, and we delayed that fork as long as possible. We were able to both have full-time day jobs that we were interested in and excelling at, and also this side hustle. We continued that into business school. So Nick and I both took the classes, and we both got the internship offers that summer in between year 1 and year 2. But we also had Market Snacks, which was doing really well. And it got to the point where we realized, hey, we kind of have like the conservative business school route with good jobs lined up. And we could do that and do the McKinsey route, as you say. Or we could go into risk on mode, go fully into Market Snacks. For the first time, transform our side hustle into a full hustle. and see what will happen here. And Nick and I looked at each other and we said, if we succeed, wow, this is a dream come true. We're going to be entrepreneurs full time. The sky's the limit. If we fail, we gave it a shot. This newsletter space is getting crowded. We need to go all in right now to see what Market Snacks is going to become. And if we fail, that's an incredible accomplishment, and we'll tell some great stories in future job interviews. So it was the summer in between year 1 and year 2 of business school that Nick and I turned down those internship offers that we had and went all in on Market Snacks, scaled up from a daily email newsletter, which would produce like 1,000 editions of, to a daily podcast as well. And that summer of 2018 was when we started to become a podcast first company.
And the podcast came about because you received an email from someone from Cadence 13?
Well, it actually began earlier. And this is kind of a cool entrepreneurship path. But like everything that happens when you're starting a company may not happen for the reason you think it's going to happen. And it leads to opportunities you don't even think of. So over the summer, Jack and I ended up getting nominated for the Forbes 30 Under 30 list. And then
in media or finance or what?
In media. And ultimately, we ended up getting on that list. And the reason we got on that list is because we'd done a lot of TV appearances like on CBS and others in the spring. So in a funny way, one thing led to another, TV appearances we were doing gave us credibility. That led to us getting seen by Forbes. That led to us getting on the Forbes 30 Under 30 list. And then after that, Cadence 13, a podcast production company, sees that and reaches out to us and say, hey, we think your newsletter chemistry could translate and your TV chemistry could translate really well into audio. And so
Possibly.
that podcast, possibly. And Jack and I were like, we hadn't even considered podcasting. We had no idea.
They invited us to come to New York for an audition, basically, in January of 2018. And they said, do you want to come and do a podcast episode? And Nick and I were like, this is before we decided to commit full-time to Market Snacks that summer. We said, sure, let's do it. Nick and I love getting together. So we both flew. I flew in from Michigan. Nick flew in from Philadelphia. Nick trained in from Philadelphia. And we basically looked at that day's newsletter and performed it into microphones and told the stories instead of wrote them. And Cadence 13 said, hey, that was rough. That was crude, but there was something there. We'll offer you guys a season if you want. To do a podcast, just like your newsletter, but audio. We think there's a void, but the void is for daily business news podcast. So they said, we'll offer you a pilot season, 90 episodes on one condition. You do it daily. And that's when we realized we can only do this if we went full time. And we said yes and had our first episode May 23rd, 2018.
It's when we also realized that every media form is different. So what Jack and I started with, which was just talking to mics, we soon realized, and we worked with Cadence 13 on this, is much more of a craft. And to be successful in a medium, whether it's newsletter, podcasting, video, or whatever, you really need to treat it like a craft. And over the next few months, Jack and I realized that we couldn't just talk into microphones, that actually wasn't, there was chemistry there, but that wasn't the best content. And we realized we needed a formula, a system, consistency. We needed to work on our tone, how we spoke, how we crafted stories, the length of each one, our timing. And that's what we basically did over the beginning of that summer, was really start to hone our podcasting craft.
And what was Cadence 13 actually offering you? Like, were they offering you an advance or to sell your ads, or were they offering production help? Like, did they give you a producer and an editor? Like, what were they giving you specifically?
They gave us an editor, which we absolutely needed. Someone who would take my audio file and Nick's audio file and merge them together and cut out the bad parts and only keep the good parts. So editing is crucial, and Nick and I have never done that ourselves, and we're not able to, quite frankly. They also did give us a producer. They helped us create the logo that you see on the podcast platforms. They just created and distributed our episodes every day on an RSS feed. But crucially, monetization-wise, they did sell our ads. They did not give us an advance, but we agreed to a revenue split. So we were both aligned to grow the show as much as possible. And that's what they helped us grow, and they sold our ads, and that's how we made money.
A lot of creators ask us how you start a podcast. And we tell them there are a few paths. First of all, the startup costs are small. The scale-up costs are high. Starting a podcast is fairly easy. Getting to consistently do one is hard. And that's why something like 90% of podcasts never had more than 3 episodes. But when it comes to launching one, you can begin one on your own and kind of grow through word of mouth. If you have an existing audience, like a newsletter, that's powerful. That's what we had. So we could distribute the podcast immediately to our newsletter audience. And we kind of learned that having a production company was really helpful and they bet on us because we had the newsletter. They knew we had that audience. But for Jack and me, not editing was huge. Like Jack mentioned, we didn't edit. Like that was not a skill we needed. We've been podcasting for 5 years. We've never needed to use it. Yes, we pay for an editor. Yes, that's costly. But we found it would to be more costly if it were our time that we're spent a few hours a day editing, especially for a daily show.
Well, I'm jealous for that. That's definitely like if I ever reach a certain revenue benchmark, that's going to be maybe my first hire is some kind of podcast / video producer.
It was our first hire too.
Yeah, it's going to free up your time and improve the product.
So you decide to go all in on this media company around the same time you're launching this daily podcast. What happened? Like, what did that do for your audience, for your business? Like how quickly did that take you to the next level? Because like now you had this growing and popular newsletter, but then now you had this podcast networked backed show where you were doing both simultaneously. What was kind of the synergy between the two, and how did that take you to the next level?
It was kind of a combination of luck and hustle. Hustle in that Jack and I spent the first week literally contacting every person in our phones to listen to the show. And I'm not exaggerating. Jack and I actually had our phones up, right? Jack, and we would customize a different message to each person with a link.
Individualized text message.
We would love for you to check this out. That was the first thing. Like we were just like, we're going all in on this. The second thing was the luck, which was that Jack and I didn't realize, and this was other people who recognized this, but that our chemistry and our style that worked well on TV and that came out in text thrived in audio. And that audio was meant for like an intimate experience with personalities. And that was where we could really have fun. And so we kind of like early on recognized, oh my God, there's a lot of engagement here. People were pinging us in a way that they weren't with the newsletter, because your personality can come through to a certain extent in a newsletter. In a podcast, it can come through in a different way. And that was totally fresh. And when we saw the reviews coming in, I was actually on my honeymoon, and Jack was being amazing because I was in Italy on my honeymoon. We launched the podcast like right before my wedding, and we'd already sold the ads, so we had to keep going. So I was in Italy and would record it like around aperitivo time, and Jack had been preparing the pod. And we would every day just keep getting these reviews in, even though we were doing this while we were remote. And we were like, okay, there's a traction here and a level of response that we hadn't seen before. And that made us realize that we could keep doing this.
Big moment. I mean, big moment for us is when Apple promoted us to the front page of the Apple Podcast Store. We don't know how that happened.
Well, I'm sure Cadence 13 had relationships on that front.
I'm not sure that they were responsible for that.
Honestly, the funny thing we discovered, Apple's like a black box. It is hard to break through.
It was a complete surprise to Nick and me that we were on the front page of the Podcast Store. You know that big banner thing at the top with like 5 shows? We were right there. It was incredible. We were probably 20 episodes in, and we were up there. And that was a great moment for us. But still, we had become a company at that point. We weren't just a daily email newsletter. We were a media company now with 2 daily products, offering a newsletter to people who like to sit down with their coffee and read the news every day, and offering a podcast to those who like to listen while they're walking their dog because they're so damn busy. They don't have time to sit down and read a newsletter. So one opportunity we had no idea how many doors would open for us. Once we just showed the commitment that we were going all in on this, it changed things.
Hey, I just want to interrupt the programming for just a moment to note that you are at the halfway point of the video. If you made it this far, then that's probably a sign that you like this sort of content. So maybe just take a second to subscribe to the channel below. If you're feeling especially generous, you can hit the like button. Okay, back to the show. Yeah. And this was, just to be clear, this was like a very broad product. Like this wasn't something that was consumed with people who had Bloomberg terminals. This was a product that anyone with a college degree, a working professional who may have been like a retail investor or just wanted to be, keep abreast of what was going on in like the business world. This was that kind of product. So it's not like you were going for a super niche audience. You were actually going for a fairly broad audience.
Yes,
Yeah.
we describe our audience as the ambitious millennial. That's how we frame it now. We didn't have that phrasing before. But with ambitious millennial, it is a wide audience. And by curating business news, Jack and I thought, you know what, there are so many niche opportunities when you want to focus on business. If you want to go deep on media, that's fantastic. There are awesome options out there like yours, Simon. But also there's a complement to that. People want to know on a daily basis, what do they need to know in the news? And we realized that we didn't need to compete in the breaking news space like the New York Times and the Wall Street Journals because we couldn't. But rather we could exist in this growing space that we saw, which is with all the information out there in the world, there's a desire for curation and highlighting that curation. And Jack and I could do that for business news.
We became a morning news show for people. The one place that they need to go to find out what's going on, but crucially, to discover insights. So Nick and I deliver not just summaries of the news, but the insights that we have from our experience working in finance, working in entrepreneurship. Every book we've ever read, every class we've ever taken, all the most interesting things we've discovered in our careers, we find ways to get them into the show. And so people learn insights that are relevant to investing, that are relevant as a consumer, or that are relevant as professionals who want to excel in their career.
And they're going to get it in a voice and a style that's different than anything else out there. So it's a unique combination of all that range of insights from entrepreneurship to finance to business school that Jack and I can bring. And on top of that, we're doing it in a way that makes it sound like you're hanging out with your best friends and you're enjoying it the entire time.
And how did you first get introduced to the folks at Robinhood?
Robinhood emailed us that summer. I told you so many doors opened that we didn't expect. This was one of them. They said that they wanted to advertise in our newsletter. And we said, sure. Robinhood was a booming company, the first exchange that offered commission-free trading, which to me personally, and Nick as well, was a huge benefit. I remember the first stock I ever bought was for $200 worth of Ford Motor Company stock, because that's all I had, $200. But I had to pay a $15 fee to get into it, so I actually only had $185 of Ford. I was down 7.5% the moment I clicked buy. The stock gained back that 7.5%, so I was back up to 200, and then I'm like, damn, I gotta sell. So I sold, and then I lost another $15 on the commission on that end. So I actually had a stock that grew 7.5%, but I was down 7.5% because of these fees going in and out. So Nick and I found it to be a wonderful opportunity for small money investors to actually make a foot into the financial market.
And so
That's exactly what we said in our ad that they ended up doing in our newsletter. They did a week full of our newsletter ads.
And then how did that conversation about advertising basically transform into an acquisition?
Jack and I had a thesis that we'd seen in business school, which was that tech companies need media companies to engage with an audience, and media companies need tech companies to help scale and grow and monetize. And so we'd seen this starting to play out with a few examples. At the end of the day, acquisitions come down to ideas and people, and they have to have the right people with the right ideas in place. And at the time, there were people, including co-founders of Robinhood, who were really excited about the idea to build out a news arm for the idea of educating and engaging this audience that was going to be trading in the app. And they discovered that it's pretty hard to do that because tech companies can't naturally do media on their own. So the fact that we'd partnered together, had built trust, had similar shared audience, meant that there was something there with potential. And so they broached the conversation with us on a phone call. And Jack and I were looking at each other and we were like, oh, this is a different kind of
They asked us,
conversation.
they're like, what's your 12-month revenue forecast? We're like, that's a funny question for an advertiser. What do you mean? And then they're like, do you plan to grow into any other future products? And we're like, you guys want to advertise in our newsletter, right? Finally, they dropped the A word, acquisition, and they invited us to fly out to California to talk about an acquisition. Nick and I kept our composure on the phone call, but once we hung up the phone, we rejoiced in celebration because we knew this was just an awesome opportunity. We never could have foreseen this. We flew out to California. We met with the co-founders of Robinhood. Their vision seemed awesome. We were excited to join, and ultimately, they offered to acquire us, and we accepted. we changed the name from Market Snacks to Robinhood Snacks, and Nick and I led the news arm of Robinhood, which at the time was, incredibly booming in terms of consumers who wanted to take advantage of this commission-free trading opportunity.
It was a wild ride at Robinhood. I mean, Jack and I were like employees 250 at the company, and that was in 2018. And when we left 3 years later, it was a 3,000 person publicly traded company. And in that time, a lot of news had happened, making Robinhood a household name. And kind of as was in our thesis, we were a part of that and getting to engage and grow with that audience over that 3-year period, which was huge for the newsletter and huge for the podcast.
And what did that do for you, being under the umbrella for Robinhood? Like, obviously, you had a really well-known brand associated with you now. You had much more resources. I'm guessing they allowed you to hire and stuff like that. What did that do for the media side of the business?
Growth. It was growth. Robinhood was getting tons of app downloads, and everyone who downloaded the app got an email from Nick and me. And that was just an unbelievable growth opportunity for us. Every week, we sent an email to the entire Robinhood user base. And that grew and grew and grew to numbers in the double-digit millions. Public information. So suddenly, we were sending an email to over 10 million people. So that was incredible. And while that wasn't possible in podcasting, because podcasts are pushed out to people, and we didn't have their email address equivalent for podcasting, we were able to introduce them through the newsletter that there was a podcast too. So the podcast enjoyed growth that we never could have had on our own without the massive fire hose of distribution that Robinhood gave us.
And was Robinhood giving you any feedback on what this was doing for their business, like in terms of driving user acquisition or anything like that? Did you get any sense, or was it just a pure branding exercise, or what was kind of the measurement on that side?
The measurements actually shifted, and it was really interesting. At first, there was a question of whether or not we were going to drive trading activity. And Jack and I were like, wait, that's actually not the goal of our products. In fact, we have a disclosure at the end that says, like,
this is not investing advice.
Yeah, so it's not.
This should not be intended as a recommendation to buy or sell a security.
And if we're saying that, then we shouldn't be measuring trading activity based on that. So we ended up kind of shifting the measurements, and the surprise, which was really thrilling, was that how much of a driver of NPS and enjoyment, essentially, of the Robinhood product came from the snacks products. And that
the snacks products were driving customer love, which was fantastic, and Robinhood measured that. What Nick and I measured on our own, podcasting is an anonymous relationship. We don't know who is listening. We can't email them. All we can do is put out our podcast, and they can listen to it. We wanted to learn a little bit about them, so we created a very short survey, and we described the URL audibly to our audience and said, please fill out the survey. We'll give an Amazon gift card to a few people just to juice up the motivation a little bit. And we were shocked that I think 3,000 people typed in the exact URL that Nick and I said and put in our podcast description. So we finally had some customer data, and we learned that I think like a significant percent of our audience discovered the podcast before they had discovered Robinhood. And so that was a bit of a growth story that we were able to tell Robinhood, that this podcast has a top of funnel marketing tactic, and it's working.
So how did you end up leaving Robinhood, and even more importantly, how did Robinhood let you take your podcast with you?
Well, Nick and I had been at Robinhood for 3 years. We did hire up, as you asked earlier, Simon. We had 8 people on the snacks team when we decided we were going to leave. The newsletter was running without us, by the way. Nick and I had about a year where we were writing both the newsletter and doing the podcast every day, also while working on lots of other things at Robinhood. It was completely insane. But our first hire took over the newsletter eventually. We hired some editors. We had a team of 8 people, and we knew that the newsletter could run without us, and that was a huge success. The newsletter was genuinely a success, too. It had fantastic open rates. So many people had upgraded from the weekly newsletter to the daily newsletter. Robinhood loved to announce how useful the newsletter is in their PR in terms of informing and educating their customer base. But Nick and I realized that the podcast is our future. We love the podcast. It's the best job we never knew we were going to get into. And we wanted to do our show for the rest of our lives. It's our baby. It's our new baby. When we're 70, we might hang up the mics finally. But until then, we want to do this show forever. And we also just realized the acquisition was successful. The newsletter was so good. Robinhood Snacks was a news and media arm. So Nick and I were going to leave either way. And we basically said the newsletter is fantastic. Podcasting is our future. And we asked, can we take the show? And we reached an amicable agreement where Robinhood became the exclusive advertiser of the show after it transitioned over to Nick and my new company. And we had to rebrand the show. We couldn't call it Snacks anymore because Robinhood Snacks is still the media and news arm of Robinhood. So we renamed it and relaunched, and Robinhood was the exclusive sponsor for a year. And thank goodness. I mean, it was a great way for them to kickstart our careers again as entrepreneurs.
It worked out for everyone. And it was, on at the end of the day, the co-founders of Robinhood, Vlad and Beju, are both good guys, fellow entrepreneurs. Like we said, we bonded with them when we first did the deal. And they understood that Jack and I wanted to get back to entrepreneurship. And this was a product that was tied to our personalities, not the Robinhood brand.
And what was the new name of the podcast?
So this was exciting because it almost was like the perfect evolution. The new name for the podcast was The Best One Yet, or as Jack and I call it, T-Boy for short. And what's so exciting about this brand and this name is that our previous name was Market Snacks, turning the market into a snack. Then it was Robinhood Snacks, same literal function. We make news snacky. Jack and I realized that great branding really is about a feeling that you have and attention in there too. The feeling that we give people every day is that episode was the best one yet. Because every day when we begin the show, we say that, Jack, this episode is the best one yet. It's the best one we've done. And we honestly really believe that when we say that at the beginning of every show. And we noticed that listeners were expanding upon that, saying that day was their best one yet. This project was their best one yet. Their work accomplishment was the best one yet. It was a T-Boy. And so Jack and I realized that the show was about more than just the business news we were delivering every day. It was the feeling, the happiness, the laughter that people were leaving the show with. And so we rebranded the show. We went through a big rebranding exercise as T-Boy. And that's the show today and how it's been for the last year and a half.
And you've since expanded into video. Obviously, this is becoming more and more common now that, especially now that there's better recording software for video. Like we're doing this on Squadcast, and Caster's another one, and then I believe both of you use Riverside. So what is video open? I know that the YouTube channel is still relatively small, but what is that doing for you that you weren't able to do before?
Twofold. First, it let our audience know what we look like, and there's some value to that. It just enhances the relationship. So Nick and I turned on the cameras for our first T-Boy episode, published on YouTube, also published on Spotify with video, and our audience is like, whoa, that's what you look like. Nick and I occasionally get stopped on the streets now from our listeners, which is great. We love that. So if you see us, we would love to say hello. The second key benefit that Nick and I have found is that now we have material that we can use for social media. A major growth avenue for us is using the social media platforms, checking the right boxes of the algorithm by making content that people are interested in and want to watch and want to share with their friends. Doing that with just audio was just not working. Audiograms, no one's going to swipe through their Instagram or TikTok and just hear something without also looking at something. So now we had something that people could look at. So every day we take our video podcast and we basically take our best story and turn it into a highlight that's 1 minute long, and we publish it on social media so that those who are looking for news on social media find the best one yet, follow us on the social media channels. Maybe someday they upgrade to the podcast or the newsletter, or maybe they don't. Either way, Nick and I have found new users that way.
And it
Thanks to
introduced
video.
some virality to the product, which isn't normal within podcasting. That's the way I'm seeing, a lot of these podcasters use it, is like for the first time they're having these like short clips go viral and getting to, capitalize on those network effects that, whereas podcasting is generally usually like a more of a word of mouth type of marketing channel.
Exactly. It's kind of, Jack and I have always said with podcasting, with newsletters, what's fantastic is they're easy to forward, easy to share. It's pretty fundamental, and then easy to one-click subscribe. With podcasting, discoverability is more challenging. When you're in the rankings, it's great because you can keep growing in the rankings. But other than that, it's pretty hard. It's just purely word of mouth. And then that person has to go into a podcast app, click subscribe. There's a lot of barriers and friction. So what video has opened up for podcasting is potentially the best route for discoverability, which has been the biggest challenge for the industry. And so that's why our investment in video, at first we thought of as we're going to grow our YouTube channel, really has become we're using this cut up video in order to go viral on a different channel. For example, actually, our YouTube channel, like you mentioned, the follower count is small, but on shorts, the short form YouTube clips, we get much more engagement than we do with our full show on YouTube. And it's an example of exactly what you're saying, Simon, about shorter clips of video can really enhance discoverability in a way that pure audio can't and that long form video can't.
And then you've also recently gone back into newsletter writing, correct?
Yeah, we learned in our days both at Market Snacks and Robinhood Snacks that some people just want to read a newsletter to get their news, and some people want to listen to a podcast. And so we wanted to offer both of those things. We also know that with our daily podcast production, we were writing notes, doing research, and fact checking in order to produce our podcast. And that was the legwork for writing a newsletter as well. So Nick mentioned voice, choice, and distribution. We've already hit the voice and the choice when we do the podcast. All we needed now was the distribution, and we could reach the email newsletter audience as well. So we hired a writer, and she joins our Headline Hammer meeting every day where we select the stories. She's there as Nick and I do research and write the podcast notes and do the fact checking. And it's her job to transform our audio show into a daily email newsletter. And that's what we've done.
So you started out as something just the two of you, completely bootstrapped, even done as like part-time to start out with, to then doing it full-time, to then working for this huge public company that allowed you to staff up. Now you're a small kind of independent media company again. Like, what are your ambitions going forward? Would you want to launch more shows in other verticals and other niches? Do you want to build out a network? Do you want to do more traditional journalism that's like on a website versus a newsletter, like longer form articles? What would you like to be doing like a couple years down the road?
Well, Jack and I think we've carved out a new category. We call it Pop Biz. And it's a category that involves business news and pop culture relevance. And with Pop Biz, we think we're the early mover in this. What's exciting about being in the media industry today is that, like you said, we are small, Simon, but our ambitions are big. And as a media company today, you can run in a very efficient way, as you know, with all your distribution platforms too. So what Jack and I have found from our years, starting with this as a side hustle and then being part of like a larger company, is that we can run a powerful operation with a very efficient team that's excited and motivated and engaged on a daily basis. We have 2 full-time hires. One runs all creative social media. The other is doing all producing and editing. And together, this small team is able to reach over 50 million podcast downloads last year and now launching into newsletters. And we're able to do that because Jack and I really think that when you start from scratch and you think really lean as a media company, and with all the technology at your disposal now, you can run a highly ambitious company and do it with a super lean cost structure. And that's what we've been able to do, and we want to continue to grow that. Our goal with the company long-term is to make T-Boy as relevant as any kind of pop cultural trend and do it in a pop biz way where we're rooted in the business news that we love covering.
To give a little bit of specificity, Nick, we do want to do the show for another 40 years and continue to be a morning companion for people looking to learn what's going on in the world and also get brighter. We're going to keep doing that for 40 years. But 4 years is a long time, and we want to launch a new product between now and then. And one thing Nick and I are thinking about is what's going to be our legacy. Our show is ephemeral. Every day, it gets replaced with a new T-Boy that's better than the previous day's T-Boy. But it's also more relevant news because news loses value with each passing day. Nick and I have a massive ocean of knowledge in our brains after covering 1,000 podcast episodes and 2,000 editions of our newsletter. We want to create an evergreen library of the best business stories that have ever happened, that Nick and I have found and that are untold and would really just be entertaining and uplifting if people learned about them. So our show is ephemeral every day. We have ambitions to create an evergreen library of the best business stories you've ever heard.
So it'd be like a narrative video storytelling or something like that?
Jack and I have, yes, video would absolutely be a component, audio would be a component, and text would be a component. Those are the three areas we think that like are a powerful tripod for reaching people in a unique way, each different way. When it comes to like what that structure looks like, what Jack and I like to combine in every story is we like to have the key kind of news hook, something that's an interesting angle on a story. We then tend to have a climax or tension, like a surprise that you wouldn't expect. And then we always have a takeaway, an insight that you can do something with that is powerful, kind of like evergreen uses. For example, Jack, we were just doing a story yesterday on the show, or actually in today's episode where we talked about French fries. And the surprise news hook was that there's a huge publicly traded French fry potato company based in Idaho that's $13 billion. The interesting news hook after that was that they actually calculate what percentage of fast food orders are using their fries, and it's higher than you'd expected. And our insight and takeaway was this idea that actually this is a better way to measure consumer confidence than asking people if they're confident about the economy. If we can see if they're putting French fries in their orders, that's a better sign of confidence. There's nothing political about that. So that's the type of story we do. We think there's an evergreen potential to that and a bunch of other stories based on our insights and our takeaways.
And do you think that you're going to be a mainly kind of free advertising supported media company mainly going forward?
For the podcast, yes. And these new initiatives, they'll probably start with a podcast because that's what Nick and I know so well, and we can launch new audio in a lean and efficient way. If we were ever to transform into a more produced video version of our product, we're agnostic to the business model of that. It could be a YouTube series that's free and supported by ads, or it could be interesting to one of the streaming platforms. We just don't know. We're open to anything on that. But what we know best is audio, and we think the ad-supported, free-to-listen model works really well for us.
Yeah, we could have launched a subscription product by now. We've chosen not to because Jack and I love our audience. We love the Yetis. That's their name. That's what they call themselves. They also call themselves the Besties, kind of both. And our goal is to reach as many Yetis and Besties as we can. And, you know, if that means having ads in there, but reaching more audience, right now, we think that's what makes the most sense.
Okay, Nick and Jack, those were all the questions I have for you. Where can people find you online?
tboypod.com is where you can learn about Nick and me. That's where you can find the podcast on all the podcast platforms. We're free to listen to everywhere you listen to shows. And you can also subscribe to the best newsletter yet at tboypod.com.
You can get a podcast on Apple, Spotify, wherever you get your pods. And then, like we were just chatting about, Simon, for all the creators out there, if you're curious to see how we cut up video and what our producer and our creator do to really take a podcast product and transform it into video short clips, you can see that on Instagram at tboypod. Also, kind of a cool thing, if you check out the newsletter, the podcast, and video, you can see how we take the same piece of content and help it exist in 3 different places on 3 different mediums, which is kind of cool from a creator perspective. And it's a craft Jack and I have been working on. You kind of need a different approach to each medium, and we're really focused on that right now.
Okay, this is a lot of fun. Thanks for joining me.
Thanks, Simon. Great to be with you.